My friends, what is going on? Welcome back to the channel. So I promised on Twitter that if we got 500 likes, I would drop an AMC GME video today, and that's what we're going to do. Before we get started, if you haven't done so already, please follow me on Twitter, Colin_Gladman. That is the only Twitter account that I have. I will not message you, DM you about crypto or your trades or anything along those lines. There's a lot of scammers out there, so please be conscious of that. Also, too, I am signing up people for my Discord. I'm taking 50 spots only for the entire month of June. We're doing a memorial sale, so it's 25% off your first month. The link is pinned at the top of my Twitter page. Plus, I'll also put the link in this video. The way we approach the market in my Discord is no hopium. Everything that I do, including this video, is going to be only what I can prove/show on the chart from a technical analysis standpoint. Those of you that have followed me for any amount of time know that I'm not just going to hand out hopium or ridiculous price targets or anything along those lines. I think the market is way more fun when the memes are running, and the memes are running. I enjoy volatility. Once again, those of you that follow me for any amount of time know that my favorite stock to trade is Tesla, which provides a lot of volatility. So, yeah. Anyway, I want you to make awesome decisions for yourself, your family, and your portfolio. If this video is helpful to you in any way, shape, or forms, please give it a like, a subscribe, all that stuff. All right, let's jump into it now. So, I'm going to analyze GME's chart, and then I'll kind of go over and talk about what that would look like on AMC's chart. At the end of the day, once again, I don't care about your investing thesis or your personal opinions on either of the companies. In my opinion, the reality is these stocks are in the same basket. They're going to trade, and they're going to move very similarly. So that's why, it's not a, Anyway, I'm not going to jump into all the Twitter theories on that, and one's the MOAS and one's not, or anything along those lines. I don't give two craps about that. Like I said, we're just going to analyze the chart. So, having said that, let's do so. So, on GameStop, last video I made, we talked a lot about how this 27 to 25 area was going to be important to hold. Now, we didn't hold it. In fact, the exact opposite happened. We gapped below it. So, when we gapped below it, then what I said was what we're going to be looking for is we want at least this 618 Fibonacci retracement to hold. People have asked me like, hey, I've tried to draw my fibs. They don't line up the same way that yours do. So please make sure, guys, if you are trying to trade along or chart along with me, number one, I think that's awesome. Please do so. I think that's how you'll learn and grow and improve. That's certainly what I did whenever I was first getting started. I was trading and charting alongside all the guys that were teaching me. So having said that, make sure, that your chart is set in log scale and that your fibs are set in log scale as well. Easy way to do that is you just right click on it, you go to settings, and then it says fib levels based on log scale. Make sure that box is checked, and you should get the exact same readings that I get. So when we kind of when in doubt zoom out here, we had the 618 was holding as great support. This is also too when the offering news, the dilution news came out that GameStop was going to do said offering. There was a day that GameStop, I don't remember what it was. I actually think it was either Monday or Tuesday. But anyway, AMC. Let's see here. What day was this one? Yeah, that Monday. Where was that Monday? Yeah, right here. So this Monday, AMC was actually doing really well throughout the day, and GameStop was doing really poorly up until close. And I said, this has got to be GameStop's 100% dumping shares right now. So come to find out, by the end of the week, right at the end of market close on Friday, GameStop's offering has been completed, and the thing starts rocketing. I also said on Twitter that there was unusual option activity going on. There was millions of puts closing out and millions of calls coming in. Those of you that have followed me for any amount of time know I always say that just news just justifies the move, right? And I said, well, let's just, for everybody that's, no you didn't. So I said on Twitter, I was like, yo, GameStop is getting awfully Where is it? Right here. Yeah. So this was at 113. I was like, GME is getting a little spicy on the tape. Puts are closing and calls are coming. And what we were seeing was that, like I said, millions of puts were closing out. Okay, and those puts were going to be what was suppressing the price as GameStop was doing the dilution, and then the calls were coming in, and so that's why you saw that big spike throughout the day. And then this is also too, guys, where people were like, it's not moving, and the reality is even a dollar move, down here, this thing went 10% essentially in 3 hours. So those kind of moves are big. Think of like Tesla, which is right around 170 right now. If Tesla went from 170 to 185 in a couple hours, that's a huge move. So I know it's not as like, well, I need to see $10 moves on GameStop before I even get excited. Once again, you got to think of it as from a percentage standpoint. So the fact that this thing moved 10% in just the last few hours of trading, once again, that's a big move. Also, too, from a volume standpoint, you guys know how big I am on that. If we go look at the volume on Thursday, in my opinion, this was the shakeout move, right? You actually broke below and you closed below that 618. But if you go look at the volume, there was just no volume on this move. And volume justifies these moves. And then the very next day, on Friday, you get a very low spread candle, right? That meaning the body is not very big, but you have a dramatic volume increase, almost double the amount of volume. So it doesn't guarantee upside, but those are the things that you go, these are red flags, if you will, because what you want to see is you want to see moves like this. So back over here where GameStop, really started its initial move up and out of here, the volume was increasing. You have a very widespread candle and you have volume that came in with it. So now we have a widespread candle, but there's no volume, followed up by a low spread candle with a lot of volume. Those are signs of like, hey, the brakes are being put on here. There's potential signs for a reversal. And then of course, after hours, you get that news and it's pumping up. So where do we go from here? Well, that's a great question. The first thing that we're going to want to see for a really good bullish reaction is just like this was very bearish to gap below this key level of 25 to 27. We want to see a gap above. So tomorrow, pre-market, what I would really like to see is some type of gap above back in here. Now, with a GameStop or an AMC, guys, you always got to remember the hardest thing about these stocks is that one, they get halted all the time when they're really on the move. And then number two, a lot of moves happen both pre and post market, just like what you've seen right here. And if we go back to, when everything was really squeezing, right? You get all this back up over in here, you get all this crazy price action and you get all these low spread candles because a lot of these moves are happening both pre and post market. So there's a good chance that this thing, could potentially gap up here, and then you come up to around 30 and you bump your head or you get halted. And so the strongest recommendation that I have is don't chase crazy high spiking IV. That's going to be a killer. Now, if you want to chase shares, at the end of the day, you can buy shares at whatever price that you want. And that's between you and your family and your portfolio because obviously shares aren't going to be affected by the high IV. It's funny, on Thursday, I was like, GameStop's getting to the price level where I'm actually about to start selling some puts on this. And for anybody that is confused, let me just explain it. So selling a put is very different than when you buy a put. When you buy a put, you're essentially betting on the stock price to go down. When you sell a put, selling a put is going to be where you're actually agreeing to buy the stock at a certain price. So I was actually going to be looking at selling around like $17 puts right here, right where all this resistance was. And for that, you, instead of paying a premium, you collect the premium. So if I bought a put, I would pay premium to buy that put. When I sell a put, and let's say I was selling $17 GameStop puts, essentially what I'm saying is, hey, market, I'm willing to buy GameStop. I'm willing to buy 100 shares of GameStop at $17. And for that, I'm paid a premium for that. So when these meme stocks are running, which I'll probably get some type of, because I do think that, sorry, I'm getting a little off track here, but I do think it's important, if you follow me, to know how to sell calls and sell puts on these stock, because once again, it's another great way to capture volatility. I put videos out about it before, but I can probably update that. So anyway, sorry, really got off track there. So, but as this thing is spiking, as that IV is drastically increasing, if you go and you buy a bunch of options, you're paying that high IV, you're paying that super high premium. When you're selling options, selling puts, selling calls, then you're collecting that premium. So for me personally, unless you time it just right, which if you do, awesome sauce and congratulations to you. But selling puts and selling calls is a better and safer way to trade these than necessarily always buying puts or buying calls. So sorry about that. Let's jump back into the TA. So what we want to see, the most bullish thing that we can do is we can get a gap up above this sort of 25 to 27 level. Once again, going back, this was all a ton of resistance for a long time. Now we want to see that act as support. When the GameStop offering news came out, Roaring Kitty was posting a whole bunch of tweets, which I think we're probably going to get one come Monday. But back over here, this is where he stopped when the offering came out, and now we came back down here. So like I said, we gapped below it. So that was pretty bearish. Now we want to see the opposite. We want to see a gap above it. If we see a gap above that, then we're going to be easily pushing up here towards this $30 level. Beyond 30, then we can really start pushing, the 40s, the 50s, and the 60s again. Also, too, this is setting up a, pretty much a perfect Elliott wave pattern of wave 1 and wave 2. So we have wave 1, which pretty much catches most people off guard. Roaring Kitty starts tweeting. Then all of a sudden we get the bearishness of wave 2 and the offering happened. And I'm gonna pull this up here real quick. I want to read you guys the psychological aspect of what a wave 2 does. So wave 2 in Elliott wave theory, wave 2 corrects most of wave 1, but can never extend beyond the starting point of wave 1. So essentially, the way we know wave 2 is valid is essentially so long as this bottom down here at 993 holds. But typically what you want to look for, which I discussed in the last video, is once we start dipping into the discount zone, which the discount zone is anything below the 0.5. This is where the big boy, you can say whatever you want about retail, but big boys are the ones that move this stock. Options are the ones that move this stock. So once you start getting into that discount zone, then that is where big money wants to load up. Retail wants to FOMO up in the premium zone, and big boys load up in the discount zone. So typically, so I'm sorry, let me back up here real quick. So wave 2 never extends beyond the starting point of wave 1, and typically the news is still bad, right? So we had wave 1, and then we go, oh, Roaring Kitty is leaving, oh, dilution is coming, oh, everything is still bad, okay? As price retests the prior low, the bearish sentiment quickly builds. And the crowd, and this is in parentheses on this, the crowd is going to be the media, right? The media is just like, oh, he came, he went, he pump and dump. I mean, how many people have you been seeing on Twitter and the news and everything like that? Just like, oh, Roaring Kitty's a scam, he was a pump and dump, or his account was hacked, all that kind of stuff. So the crowd haughtily reminds that the bear market is still deeply entrenched. Still, there are some signs, there are still positive signs up here for those who are looking. Volume should be lower during wave 2 than it is in wave 1. So let's go check what's happening. So here we go. Wave 1, volume increases. Wave 2 happened, volume decreases. Price usually does not retrace more than the 618. So here we are at the 618. So we slightly got below that. Now we've got offering news is over, and now we are off. So what you want to see. So there's two big gaps that I'm going to be looking for. Obviously, number one is going to be the gap leading into Monday. The gap leading into Monday, I want to see us gap up at least in this area, if not more than this area. Now you go, oh no, gaps, those create problems and everything like that. But what we're really looking for is we're really looking for what are called breakaway gaps. Breakaway gaps happen when like fundamental news comes out and there's going to be a lot of volume. Breakaway gaps are not as bearish, okay? So I know we talk about gaps getting filled. This one did not. So there was a gap right here all the way down to 1750 and it didn't get closed. This one came down to 1770. Yeah, so there's still a little gap in here. But with the news that's coming in, we're looking for breakaway gaps. Also, too, you got to remember that anybody that's been shorting this thing here, since the top, their stops, let me get in here, all those type of stops, guys, are all going to be up in this area. So what you really want to see to really fuel this rocket is we want a breakaway gap that is going to be above these previous highs. Once we really start getting a breakaway gap above this previous highs, then there's no doubt in my mind that wave 3 is off and going. Now, once again, you got to remember, these type of stocks going to be subjected to halts. It's going to be a grind. But what we're going to be looking for here is we're going to be looking for a move that is going to be somewhere around that 1.618. So that would take us all the way up to 366.54. Now, does that have to happen? Absolutely not. We never speak in certainties. In my Discord, I only speak in probabilities. But the probability is that this thing is going to reach all-time highs and then some. I think that's more likely. To me, it's no surprise either that this one extension is chilling up here pretty much at the exact all-time highs. So let me just throw a little horizontal line. Right? So that's kind of previous all-time highs. It's chilling up here, also around 115. You can say whatever you want, but there's going to be people who are either underwater, who are bought back in here, and there are going to be people that sell. I do not care what you say about it or what your own opinions are. There are going to be people who take profits, and I think taking profits is smart. Feel free to burn me alive at the stake because I said taking profits is smart. Please take profits, especially if you've been bag holding for a while. Now, where you decide to take profits, that's between, you yourself, your family, and your portfolio, like I always say. But I absolutely think that wave 3 could take us all the way up towards the 366. Certainly, at least back towards all-time high. Roaring Kitty starts coming back again, right? You can see it. And this can easily happen. It has happened before on these stocks. So don't be surprised when it happens again. So then what you would be looking for is, assuming we can hit, that type of price target. Show you this. So then what we would be looking for is we'd be looking for a little bit more shallow pullback. Now, it's still going to be, like, I'll just map it out for you here. We'll just do it that way. So, and pay no attention to the time frame. That's not what I'm worried about. So we get like wave 3, and we get a 4, and then we get 5. What you want to bet, the previous all-time high is pretty close to what I'm going to be looking for here. So assuming here, we get that. Yep. Okay. Just crazy. So typically, wave 4 is going to be your more shallow pullback. Wave 2 is the more steep one. Wave 3, this is going to be your longest, strongest one. And then wave 4 usually pulls back to about somewhere between the 236 and the 382. Notice that 382 is the previous all-time high. Right? It's just, these things are not an accident as far as I'm concerned. Then wave 5 would extend pretty much like wave 1. Usually right around the same distance, or the 618 of wave 3, which then that takes you to 806. So I'm not, once again, trying to give anybody any hopium or anything along those lines. This is exactly how I would map it out. It wouldn't matter if this was Tesla. This wouldn't matter if this was Apple. This wouldn't matter if it was Microsoft. Literally any stock on the planet, right? And if you go back and look, if we win and out, zoom out, right? Let me go to the higher time frame here. Right? Makes a whole lot of sense. You can see that happening. If we were looking at this like a 15-minute chart, you'd be like, yeah, okay. Yeah, this thing, shoots past, comes back, retests previous all-time highs, starts moving on up from there. It depending on how they, use the funds that they just raised, which I'm not getting into that or speculating into that, this makes a lot of sense. Now, does that mean you should go out and do something stupid? No, absolutely not. But this is absolutely a very likely path, in my opinion, that GameStop can take from here. So what does that mean for AMC? Well, let's map it out literally the exact same way. So, and you can see on AMC, came down, and it's held its 618 the entire time. So let's apply the exact same principles, because that's how, like I said, that's how we map it out. So here, so our 1.618 takes us up to 59. Then we would get a pullback here. Ooh, almost nailed it. There we go. Oh, and look what that does for AMC, right? So here's the all-time high trend line, blast through, come back, and you retest that. So it's not the previous all-time highs, because once again, AMC did its reverse split and tons of dilution and all that kind of stuff. And with AMC, guys, I do think there is potential more upside with AMC than there is for GME, just because the chart is so much more beaten down. However, you've always got to, whether it's GME or AMC, you always have to be careful about share offerings along the way, because those can definitely throw a wrench in, if you will. Then what we'd be looking for is, so about 110. Like I said, don't pay any attention to the timeline on this. This is just kind of what I'm looking for. And that would make a lot of sense here, because then AMC would be getting back up here into this August 22 areas. That would be all right in here, all of this resistance area. So that would make a lot of sense if AMC, that's kind of where it topped out. Then you'd be looking at kind of a long corrective period after that, okay? It's typically after this, then you would get some type of like A, B, C correction before potential move topside. So, again, cannot stress that enough, if we get some type of move like this, that's a 1, 2, 3, 4, 5, an impulsive move topside, then yeah, just be smart about what you do as far as profits go. And these price targets, once again, they don't have to hit. These are just the projections of what typically can happen. So, if we stop, I imagine there's going to be some bumping your heads up against the wall around that 115 area. So, and typically these moves will also have their own little 1, 2, 3, 4, 5 moves up in them. And here, let me just show you what I mean by that. So, right here, you had GameStop, move 1, out, came down, hit the 0.5, so 1, 2, and typically this is what you see, right? So you see the big move up, and then you have the quick retrace. And then you got 3, Look where this all topped out. Right around this 1.618, right around that 28 to 30. Then oh look, retrace to the 382, and then you got 5. See? But like this one, it overextended a little bit to about that 786. So, when they say you can't use, technicals on meme stocks or anything like that, tell them they stupid. Don't do that. Be nice. Be nice to the dumb people out there. But this is what I'm looking for overall, both AMC and GME. And if we do get this big, massive, impulsive, move topside, up towards around, that 800 a share, man. I mean, if you become a bag holder at that point in time, I just don't know what to tell you. I really don't. So, let's recap everything real quick, and then I'll let you get out of here. I know I'm just rambling and went all over the place, and I apologize for that. But what we want to see is we want to see some big breakaway gaps. These breakaway gaps are going to be the ones that, kind of go, okay, is retail getting fooled? You want to see a lot of, like, oh, it's just going to come crashing down again. So I want to see a big gap above this 27 area. It doesn't have to be, just like I always teach in my Discord, that think of your supply areas or trend lines or anything like that. Think of them as kind of like rubber bands, okay? There's going to be some ins and outs. Don't think of them as like, oh, this is the brick wall that the stock price can't go past that. So we want to see some type of gap up in here. Anything above 27, in my opinion, is awesome. So let me actually, I hadn't even looked at this yet. Yeah, so anything over 27, that's going to be a nice gap up area. And like I said, there's going to be halting, there's going to be choppiness, all that kind of stuff is always going to happen in these stocks. But the next big breakaway that you want to see is you don't want to see us coming up and like chopping around 65. We'd want to see something that's up in here, like maybe around the 50. And this is where, typically like news would come in. Let's say it's, GameStop has used, 500 million of the 1 billion that they raised, and they've acquired this, that, or the other, whatever the case may be. You'd want to see something that's like I go back to that news that justifies the move, and you'd want to see some type of breakaway gap above these previous highs. Once you get that breakaway gap above previous highs, there's no doubt that from a technical standpoint that impulsive move 3 is what is getting started at that point in time. So those are going to be the big breakaway gaps you want to see. Same thing with AMC. I talked last time a lot about this $10.42 area. So you'd want to see some type of gap up, trade around in here, show this as support. For AMC, I really want to see kind of above that $8 acting as support. It can kind of hang out in there for a little bit. And then, so like I move, channel trade for a little bit, and then another move, and then start hitting these highs. So I think both charts are lined up for a nice move topside. I won't personally get concerned with either one of these unless we start. So just to make sure I'm super clear from a bearish standpoint, if we start losing, this area up in here, which was a ton of resistance, which is also the 200-day moving averages, both from an EMA and an SMA standpoint. So unless we really start getting below here, I think things look great. So that's overall what I'm going to be watching for. So I wouldn't get too concerned unless we start losing like 15. We start losing like 15, could be in trouble a little bit. But so far, and with the the offering being complete, everything like that, I think there's, let me put it this way, guys. I think there's way more reasons to be looking at upside targets versus downside targets. Back over in here, we were looking at downside targets and what we wanted to see hold. Now, I think it makes way more sense to be looking at the upside targets of things. So long as, no dilution, news comes out on either one of these stocks, I'm I think they're primed to see some good moves topside. So it'll be interesting. Once again, please follow me on Twitter, Colin_Gladman. That's going to be where, as things change and happen, I'll be posting any updates that I can. And just like this video, guys, we'll be talking about meme stocks when they matter. So I'm kind of a no news is good news. So if I don't make a new video, or if I'm not tweeting about it, that means things are just chilling. All right. Last but not least, please be careful about chasing that high IV. Please be smart about, I always say you can always reposition. You can't always get your money back. Don't try to time the very top or very bottom of every single move, especially if you're in options that can expire. If you're in shares and you're just like, I'm just going to ride the roller coaster, man, then if that's your investment thesis, I'm totally cool with it. Ride that roller coaster. Do what's best for you. If you're in options that can expire and decay, and when IV starts getting sucked out of them, it becomes a problem, then be smart, man. Take those profits. Options can be life-changing, but if you're one of the many that watched, small fortunes disappear in 2021, I hope you're smart about it this go around. I really do. But you guys know the deal. Not trying to give you financial advice. I want you to be smart. That's all I care about. Trade your plan. Just make sure it's a good one. All right. Much love. I'll see you in the next video, and have a wonderful weekend.